By the end of this video, you will know if waiting to buy the Dangote IPO is a best decision or a wrong decision. Welcome to Clockwise. My name is Providence. This is where we share opportunity you can use to make wealth in the stock market. And we analyze this stock market because we sleep on the charts, we look at the fundamentals of these businesses on a daily basis. And I don't do it alone. I am here with my guests, my in-house guest and the stock market analyst specialist that stays on the chart 24 hours. Please, with a resounding virtual round of applause, welcome Mr. Kenneth. Welcome to Clockwise.
Thank you very much. Thank you very much.
Welcome to Clockwise. Today we're talking about Dangote Refinery IPO. Now, everybody have been saying different things about it. Some will say buy, some say don't buy. But we want to critically analyze the situation and how it will affect the Nigerian stock market. But before we go there, let's first of all look at other companies of Dangote because we can draw inference from there.
Okay.
So let's look at Dangote Cement, Dangote Sugar. They are already listed in the Nigerian stock market. Let's look at their performance from when they were listed till today. Then we can now draw inference to discuss more about the IPO of the refinery.
Dangote as a brand is, I think, nobody in Nigeria can say he doesn't know about Dangote. You interact with Dangote every day. Dangote has been a very successful story. Though not always successful, there are some products that Dangote with the Dangote brand that have not succeeded, though. But when we speak about Dangote Refinery, there is a reason why we are really talking about refinery. But let us look at, incidentally, before coming here, I looked at some of the performance of some of the names that we mentioned. We've been mentioning Dangote companies on this show repeatedly. The one that comes to mind was when we talked about stocks, 5 stocks that would make you rich. It's a video that you can check. We published it on the April 8th of April, 2026. And that video, when we published it, that video, Dangote cement particularly was trading at 810 naira to $1. No, 810 naira, sorry, per share. As I speak with you, it has pushed up as high as 1,180 naira per share. What I like to do, because I like to monitor things in real time, before I sit on this podcast, any name I mention, I always like to take a position on the exact date that I mention it. I took my position at this 810 actually. I am already up 45.68%.
So if you
on my investment. So if I had put in 1 million, that means I would be sitting on 456,800 naira.
From 8th of April.
From 8th of April to today. We are not even halfway into the month of May yet.
Yes.
So roughly 1 month. So that's why where we don't recommend anything on this channel, we really do a lot of thorough research before we come up with some names. I remember when I mentioned Dangote Cement, someone actually got up to me and said, Dangote, it's been struggling with this recent resistance. I said, there's something we are seeing, and Dangote will blow out. It blew out very well. If you look at the chart, we're going to show the chart, but the chart is absolutely parabolic.
Okay.
So Dangote Cement has been a very serious
like
performer.
We always say on this channel, we can actually call out stocks we don't invest in.
Yeah.
First of all, we actually test these stocks, and actually before we come out to invest in or talk about the stock. So there are stocks that are born out of strong research and also practical research. So that's why we are here often. Now, let's shift to the IPO.
Okay.
Now, you see, many people have actually, they're assuming that that will be the biggest listing in the history of the Nigerian stock exchange.
Yes.
Now, I want to see what will be the effect first on the stock exchange, on the market, on the financial market, and Nigerian stock exchange. What do you think will be the effects with such huge amounts coming in?
Let's put it this way. And by the way, I don't know whether you remember that some months ago, when a lot of details were not out yet, we had made a prediction that Dangote will be, people were talking about 20 billion valuation. I said, no, that Dangote will be listing at in the neighborhood of 50 billion. And that means 10%. In fact, I remember in that video, I said 10% will be 5 billion. And that the Nigerian stock market might not be able to handle that liquidity. So that's why we're looking at dual listing, both in the Nigerian Stock Exchange and the London Stock Exchange. Now, let me give you some context. A couple of days ago, the Nigerian stock market hit 160 trillion. Now, in dollar terms, that is about 115.9, call it 116 billion dollars.
Yeah.
Okay.
116 billion.
116 billion dollars. Now, Dangote if Dangote comes in at 50 billion, that means that Dangote would be, let's just do the math. I mean, we are all here. Let's just do the math. So you're talking about 50 divided by 116. That's about 43.1%. Only one company will be equivalent to 41, though we understand that of the total NGX. That would be momentous for the exchange group.
Okay.
That will skew the market so much. That's why you can't just list in the Nigerian stock market alone. It's not going to happen. Because you are literally talking about raising 5 billion. 5 billion would be the kind of liquidity you need to be able to raise 5 billion. Because when you talk about IPO, you talk about raising money from the public. To raise 5 billion, that's equivalent to 1390 times 5. That's about 6.95 trillion naira.
That's huge.
That's huge. So for context, that is like just almost 40% of what the Nigerian stock market raised traded in an entire quarter. So that's a huge amount. So of course that's why it's going to be dual listed. So but the point is, if you have one company with this kind of valuation, then that means that you are going to have a very serious shakeup in the market. What do we expect? Of course, because of the anticipation, a lot of investors will rotate from other names into Dangote Refinery.
Does that mean there will be a negative effect on other stocks?
Temporarily, in the short term, there will be
benefits.
The NGS, of course, the NGS will explode.
Yes, but other stocks.
Other stocks, I mean, the reality is that we don't have so much. Remember that the Nigerian capital market in entirety is just 35% of GDP. So we don't have the liquidity. We don't have to be able to raise that kind of fund. So guess what will happen? To be able to absorb that kind of offer, then you're looking at people selling off positions in other stocks to be able to participate in the Dangote Refinery IPO. Okay. So that's exactly so. Momentarily or in the short term, you experience a lot of pressure, but also realize that foreign investors are going to come in. 50 billion is a big company, okay. By all means. And so it will attract the interest of international investors. So that's why I'm saying in the short term, there will be a lot of pressure on other stocks, but it will smoothen out. International investors will come in, will look at, number one, to invest in Dangote. Number two, when they come in, most people they don't come in to invest in just one stock. They're coming to invest in an economy. And so what that means is that apart from Dangote Refinery, they will look at that pressure would be like a buying opportunity for others. For example, we expect banking stocks to do.
I want to ask you because no matter what will happen once Dangote lists now the banking stock will benefit so much because everything will be done through the banks.
Yes.
And we'll be naturally talking about Zenith Bank, GT Bank, often. Now, let's see the effect on the banking stocks.
Yes. First of all, you know that whenever you talk about IPO, some people, investment banks are the one that do the job.
Yeah.
So you look at it, Stanbic IBTC, you look at some of those names. However, it's not just going to be restricted to the advisors. Other banks will make money. Look at it this way. If an international investor is coming into Nigeria to participate in the IPO, what what vehicle, what rails are they going to use? They will use tier 1 banks. That's why if you observe, tier 1 banks are already skyrocketing. Look at GT Bank, GT Co doesn't seem to have a top. It's just going up and up and up because investors are looking at a reliable rail that they would be able to use to invest, and not just invest, but also repatriate profits. Remember, Dangote is paying dividends in US dollars. Investors, especially international foreign portfolio investors, want to have their dividends in a currency that they can move around. Okay. They don't want to be stuck in an economy. You saw what happened 3 years ago, where some foreign interest were literally stuck in Nigeria. The FX liquidity was so low that there was no way for them to repatriate their profits, to repatriate their revenue out of the country. So they don't want that kind of thing. But and so now that Dangote says dividends will be paid in US dollars, that means it only makes sense for you to work with a partner that can allow you to access US dollars in US dollars, not telling you have to make conversions and all of that. So tier 1 banks are going to benefit so much because they are going to handle most of them in terms of investment, money coming in. They are going to provide guarantees. They are going to provide, the typical, I know in Nigeria, the typical way investors really invest is they really don't put in 100%. No, what they do is they put in something, they actually use their assets as loan to invest. When it's an asset-backed loan, you can have interest as low as 5%. They take out some facilities to invest and then make money, make the profit from the arbitrage. Okay. So banks are the ones that will handle whether it is the loans, whether it is the dividend itself, whether it is to other sectors that investors might want to be interested in. Even researching to find out other sectors that could benefit from. The banks have the departments that do this.
In the energy stocks.
Yes.
Do you see a situation where some investors will rotate from places like Aradel to Dangote stocks?
Oh, of course. Like I said, in the short term, Aradel has done very well. Seplat has done very well.
So we expect a pullback from Aradel?
So we expect a pullback. I expect a pullback, but with a caveat. Remember that these are upstream players. Investors don't invest in one sector of a particular value chain. No, they like to invest across the value chain. That's what happens. Dangote has really established a very concrete and a very strong oil and gas value chain in Nigeria with the Dangote Refinery. That's why you're even seeing, I think yesterday, the NNPC is trying to sign a contract with some foreign partners to revive other refineries. It only takes a private individual to really show us the way. We thought it was impossible. For over 20 years, these refineries have laid moribund. People said it was not possible. And then all of a sudden, a private individual came out and is doing 650,000 barrels. Guess what? All of a sudden, we now know that other refineries can work. Because we have to build competition.
Refineries actually.
Why is coming? I'm talking about the refineries that we've had. Warri, Port Harcourt refinery, we have been having, these refineries have been there. But it looks as if they couldn't work. But now, you can see that they're coming back up. So, if investors are coming in, they are not going to invest just in Dangote Refinery. Dangote Refinery is going to establish a strong demand for whatever is produced by Seplat. And if that is the case, I want you to understand that it means that profitability will be, a lot of profitability will come to the names like Seplat and Aradel, because the logistics of having to move the products out is cut out. You are literally selling to someone at your backyard. A lot of risks are actually removed from the value chain. So profitability will come to Seplat, will come to Aradel, and some other names in the upstream sector. Even downstream sectors, you're looking at Wando, corn oil, you're looking at Total Energies, you name it. These guys will also benefit because the stability in production will be. And remember, refining is a once you have access to reliable supply No, I'm talking about the downstream players now. Reliable supply, then you can almost, your margins will increase. Refining, downstream activity has a very tiny margin. You can only rely on volume. That's why if you don't have the volume, you cannot be successful in the downstream sector. So Dangote comes in with this raise that they want to do. They will be able to build their capacity and then increase reliability volume in the downstream sector. What that translates into is, even if you have a tiny margin, but with a large volume, that brings in a lot of
I see a situation where if Dangote lists its refinery today, like this morning, at let's say 500 naira per share, for example, before we get to evening, it should be like 2,000 naira per share. I see a situation where there will be
such a
huge movement
run up
in the price.
Yes.
Would that be of advantage to investors or disadvantage?
No. So that's why it will be because it could get to that 2,000, that hypothetical 2,000, and then before you say Jack Robinson, it's back down to 1,000.
So what do you advise for either long-term investors or short-term investors?
You like a refinery, you have to be a long-term investor. Because refining is a tiny margin business. So people think that refinery makes a ton of money. It's a very tiny margin, actually. You don't expect the refinery doesn't make so much. The only thing that the refinery benefits from is volume. The margins are very tiny. Sometimes the margins even fall negative. We've seen it before. When margins fell negative. During the COVID-19, it fell way into the negative territory because there was no demand. People were not moving. So there was no demand. So refining is a very tiny business. So if you're looking at a place where you can double your money or triple your money in overnight, then I don't think this is a good thing.
So you're long term.
So yeah, so if it lists, I know that because of the hype, it will jump up. But I want us to also understand something. Remember, Dangote is not the only refinery we are having this year. We have SpaceX, we have OpenAI, we have Anthropic. We have a number of gigantic companies. SpaceX is listing for $1.78 trillion. Investors have way to actually put money to. That's number one. Number two, you should also understand that inflation figure came out, CPI came out yesterday, is 3.8%. Do you know what that means? Previously, it was for April, it's 3.8%. For March, it was 3.3%. What does that tell you? Inflation is ticking back up. And we are having a new fake chair, Kevin Walsh, coming in. We don't know who he is. At least we know how Jerome Powell works. We don't know Kevin Walsh. So guess what? And Kevin Walsh is already from his antecedent. He's a guy that doesn't like to have a lot of a heavy balance sheet for the Fed. There are chances that a rate hike is back on the table. Do you know what that means? Investors are going to go run to safe havens like the US dollar. Okay. So what does that mean? That volume that we are expecting might not be as much as that. If the Fed starts a tightening cycle to fight inflation, that means investors' appetite for risk asset like stocks would crumble.
So how does
how it affects Dangote is that Dangote is not just going to list in Nigeria. Okay. It's going to list international investors. So some of these 5 billion we're looking to raise, we are looking to raise from not just Nigerian investors, but international investors. So if there's a tightening cycle starting in the US, that means investors are not going to be very, very keen to investing in stocks. And that means that liquidity that you're looking to have, that liquidity might not be there. If it is not there, the value of the refinery.
Who does this favor? Is it the short-term investors?
It favors the long-term investors, because even if we are having a very shallow price action, in the long term, remember we always talk about re-rating. Dangote is a modular refinery. You know what that means? It means it can continue to increase its capacity. As it increases its capacity, remember I talked about refining is a marginal business, a tiny margin business, and it benefits from volume. The revenue will be tied to how much it can produce.
So you just have to be a partner.
So you have to be there and look at like a 10-year investment.
Okay.
That is how I look to, I'm going to invest in Dangote Refinery as a long-term play for me.
Because
it's more like an infrastructure play. If you're looking, I'm investing in the Nigerian oil and gas industry. That's how I'm looking at Dangote.
So I see a situation whereby the price of these shares will be moved majorly by emotions than with analysis. That's what I'm saying.
It depends on who is the bulk of the buyers.
Okay.
The bulk of the buyers are most likely going to be institutional investors. Okay. Institutional investors don't work with emotions. I know that, of course, there are some people that already have a stake that might want to, especially if we look at next month's CPI and it's still high, then we can almost tell this month. Kevin Walsh will take over, most likely will take over. So we want to look at the market will test his disposition to rates. Let me tell you, you saw what happened in the bond market. You cannot discount. I want us to understand that if you are investing in Dangote, you are actually investing in it's an international asset. Whatever happens in the US bond market will affect what the price will be. So if it is institutional investors that already have stocks in Dangote, they might want to actually cash out. That's just the reality. To rotate into safe haven assets like the US dollar. If that happens, then you can see the price might come down. It might shoot up at the opening and then come down immediately as institutional investors begin to take profits. That is just one of the things that you should note. So if that happens, you might not have, and you are a long-term investor, let's say you came in, you bought it at, let's say, 500 naira. It opened at 200, ran up to 500, and then you bought it. It can come down to even less than 200, to be honest with you. Yeah, it's possible.
So you just have to leave your money.
So just have to. But if you wait a little bit, you look at it from a long-term perspective, of course it will go back up. Because as people begin to see the prospect of this, like I told you, they invest across value chain, they begin to see the strategic position of Dangote as an institutional player in the Nigerian oil, as an infrastructure player in the Nigerian oil and gas industry, then more and more people will invest in, and then the prices will go back.
All right, now, you said things that I think I will not heard in different places. I think the first time we actually hear, most of who we hearing this, that investing in a Dangote Refinery IPO means investing in the world market. So whatever happens in the US market also will actually affect your funds. Before we go, I would like you to speak to investors who are hoping to invest in this particular project that is coming in, because we hear second quarter, maybe before the end of July, it should be listed. Now, I want to speak to investors, especially newbie investors, especially those that are actually waiting to invest. Just speak to them and let's see what you have to say.
Okay, so here is what I would say. You don't chase price.
Okay.
You don't chase price, and you don't invest emotionally. The Dangote will be listed. What you have to do is allow that initial hype to die down. If you are confused, by the way, if you are a new investor, I don't even advise you to pick names. Just go invest in the Nigerian Stock Exchange Group. The Nigerian Exchange Group has done 60% year to date. 60%. So if you had even invested as a newbie, invested just a million naira, you will be up 600,000 naira now.
Yeah.
So that's why I keep on saying you can invest in the broad market. You don't need to pick and choose. So Dangote, you might not need to pick and choose, but as the price tapers down, because I expect a run-up, but the price tapers down, people begin to take profits, especially those that got in before, at the rounds, funding rounds. Before as the price tapers in, you can then begin to dollar cost average. Even at that time, you begin to dollar cost average. Like I said, we are seeing an uptick in inflation. And there's a very a high chance that the Fed might start ramping up rates, increasing. If that happens, I want to let you know, and I can tell you for a fact that risk assets will suffer greatly. I don't think it's only US risk assets, even in Nigeria, those risk assets will suffer, because even foreign portfolio investors that are investing in the Nigerian economy will begin to do what? We're going to take their funds away to run to safe haven assets like the US dollar, and that will affect your portfolio. So what you want to do is don't be in a rush to begin to allocate. You know, if you are doing it, let it be a DCA approach,
dollar cost
averaging approach, so that at the end of the day, you look at a smooth and balanced entry price for the asset that you're investing in.
All right, thank you very much. I think we can leave it here. Thank you for coming. On that note, we come to the end of today's episode of Clockwise. Please do not forget to like, subscribe, and also put on the notification bell of this channel because of the amazing content we bring. And also do not forget that the illiterate of the 21st century are not those who did not go to school or those who will not go to school, but are those who have refused to evolve as the environment is evolving. My name is Providence. I'll see you again.